You're watching Daily Market Comment at xm.com by Marios Hadjikyriacos. I'm Rafi Boyajian. The European Central Bank said all the right things yesterday. President Lagarde highlighted that market expectations for a rate increase next year are not realistic and stressed this inflation episode remains transitory. But the euro still stormed higher alongside Eurozone yields. Investors are just not buying what the ECB is saying. With inflation expectations going ballistic, markets are betting the central bank will be forced to take its foot off the gas sooner. Admittedly, though, this may be a bridge too far for the Eurozone. Asset purchases will most likely be gutted soon, but raising rates is an entirely different beast, especially when the economy isn't firing on all cylinders. As for Eurodollar, the risks remain skewed to the downside. The ECB is now priced for perfection, leaving plenty of scope for disappointment in case growth continues to underwhelm. In contrast, the US economy will weather the energy storm much better, and the spending injections from Congress could juice up growth, allowing the Fed to bring forward its own rate increases. The bond market is ringing alarm bells about a slowdown in economic growth as central banks overreact to this inflation scare. The yield on the 30-year US Treasury note has fallen below the 20-year one, signaling that the powerful policy tightening being priced in for the next few years could hamstring both growth and inflation. President Joe Biden announced the Democrats have finally reached a framework agreement on his social spending agenda. With a price tag of $1.75 trillion over a decade, the news had no impact on the stock market, although US futures are pointing to a lower open today after Amazon and Apple reported disappointing earnings. Nevertheless, the S&P 500 is about to close the month almost 7% higher despite higher yields, the energy crisis, crippled supply chains, and the prospect of higher taxes for corporations. A barrage of European data has just been released, and while both inflation and growth metrics beat expectations, the euro has been unable to capitalize. The focus now turns to some American data that will be released later on. US economic growth for the third quarter disappointed yesterday, but the good news is that the shortfall came down to falling car sales as chip shortages raged. Demand is still booming, but some sectors have hit supply wall. This was the Daily Market Comment at xm.com.